Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 159, recorded on March 23rd, 2025. This podcast is for entertainment only and is not investing advice, so please do your own homework. Taking a look at the orange block clock, we are at block 889088, Moscow time 1173. Fees are 4, 4, and 5. We'll start with the market news update outlook. Take a look at the weekly top Bitcoin news. We will check out this week's featured post on the Bitcoin Fortress Substack. Take a look ahead at some upcoming articles on Bitcoin Fortress Substack, and then we will end with our weekly boost. So with that, let's jump right in. Wall Street on Friday managed to snap a 4-week losing streak with the benchmark S&P 500 just about making it over the flat line into positive territory. After ending in correction territory last week, the index has rebounded. Federal Reserve played a big role in helping the S&P's weekly advance. The central bank on Wednesday held interest rates steady, as widely expected. Moreover, it, its updated dot plot showed lower GDP projections, higher core PCE expectations, and no change in interest rate estimates. However, it was Chair Jerome Powell's comments at the post-decision press conference that made headlines. Powell said that any inflation caused by U.S. President Donald Trump's tariffs would be only transitory. Market participants saw the developments as dovish. Where have we heard that word before? A trio of heavyweight companies also grabbed some of the spotlight last week with their quarterly results: FedEx, Micron Technology, and Nike. The parcel delivery giant cut its annual revenue guidance for a third consecutive quarter. Meanwhile, memory chip maker Micron forecast a decline in the current quarter's adjusted gross margin. Finally, the world's largest shoe company issued soft guidance. For the week, the S&P 500 advanced 0.5%, while the tech-heavy Nasdaq Composite added 0.2%. The blue chip Dow climbed 1.2%. Looking ahead, Wall Street has plenty to look forward to next week, including a busy economic calendar that will culminate in a key inflation reading. There is also a massive initial public offering on deck. In economic indicators, investors will receive flash PMI readings from S&P, along with another estimate on U.S. Q4 GDP growth. Friday, we'll see the release of the core personal consumption expenditures price index for February, a gauge that is widely seen as the Federal Reserve's preferred measure of inflation. Fed Chair Jerome Powell this week said any effects on inflation from U.S. President Donald Trump's tariffs would be transitory. Okay. The IPO market will be in focus as well, with American cloud computing firm CoreWeave expected to debut on the NASDAQ this week. The NVIDIA-backed company plans to raise as much as $2.7 billion and is looking for a valuation reaching $26 billion. The IPO will also be a big test of the flagging artificial intelligence trade. And they are looking for buyers because I got a call from the broker at Morgan Stanley. Hey, you want in? So they're going to dump it on retail. Tariffs will no doubt continue to garner attention, with traders looking out for any updates on upcoming U.S. reciprocal tariffs set to go into effect on April 2nd. And then, of course, going back to the transitory comment, the average person doesn't really care about the current inflation rate. What they care more about is the absolute price levels. So even if you have transitory inflation, the absolute price levels are going to be higher at the end of that, which means more for groceries, more for gas, more for everything that you need in order to live. Moving on to the weekly top Bitcoin news. First up is Hodler's Digest for the week March 16th through 22nd. Top stories of the week. Let's see. The U.S. Securities and Exchange Commission's multi-year enforcement action against Ripple is finally coming to an end, according to the company's CEO. This is it, the moment we've been waiting for. The SEC will drop its appeal. A resounding victory for Ripple, for crypto, every way you look at it. Ripple CEO Brad Garlinghouse wrote on X on March 19th. I'm finally able to announce that the case has ended. It's over, Garlinghouse said in a video attached to the X post. The end of a long-running legal battle between Ripple and the SEC comes 4 years after the United States securities regulator sued the company over an alleged $1.3 billion unregistered securities offering in December of 2020. So the shitcoiners are super excited. Trump becomes first U.S. sitting president to speak at a crypto conference. Now, of course, he did speak at a crypto conference as a candidate. He was at the Bitcoin conference, I think, last year. U.S. President Donald Trump is steadily aligning his administration with the crypto industry. On March 20th, he addressed a community conference for the first time since being elected. Speaking at Blockworks Digital Asset Summit on March 20th, in a pre-recorded statement, Trump reiterated that the U.S. would take steps to ensure it is the crypto capital of the world. President Trump uh, lauded the recent regulatory shift in the crypto industry over the previous administration and added, "Pioneers like you will be able to improve our banking and payment system and promote greater privacy, safety, security, and wealth for American consumers and businesses alike. You will unleash an explosion of economic growth." The lion's share of the hacked Bybit funds is still traceable after the historic cyber theft, as blockchain investigators continue their efforts to freeze and recover these funds. The crypto industry was rocked by the largest hack in history on February 21st when Bybit lost over $1.4 billion in liquid staked Ether, Mantle staked ETH, and other digital assets. Blockchain security firms, including Arkham Intelligence, have identified North Korea's Lazarus Group as the likely culprit behind the Bybit exploit, as the attackers have continued swapping the funds in an effort to make them untraceable. Despite the Lazarus Group's efforts, over 88% of the stolen $1.4 billion remains traceable, according to Ben Zhao, the co-founder and CEO of Bybit Exchange. A Coinbase report revealed that the crypto exchange is the largest node operator on the Ethereum network, controlling 11.42% of total staked Ether. In a performance report, Coinbase said it had 3.84 million Ether, worth about $6.8 billion, staked to its validators. The exchange also said that as of March 3rd, it had 11.42% of total staked ETH. Anthony Sassano, host of the Daily Gwei, said that Coinbase's stake makes the exchange the single largest node operator in the network. Sassano added that while the staking platform Lido is bigger as a collective, each node operator has a much smaller percentage share. That seems like a lot of concentration, and certainly Bitcoin doesn't work like that. There's a lot of small nodes, and of course, lots of miners too. Sitcoins, gotta love them. Let's see. Binance CEO Richard Tang denied reports that Binance.US was in deal talks with entities affiliated with US President Donald Trump during a March 18th panel at Blockworks 2025 Digital Asset Summit in New York. Tang's statement reiterated the position taken by Binance's co-founder Changpeng CZ Zhao and Trump, both of whom denied the story last week. On March 13th, the Wall Street Journal reported that Binance.US, an independently operated U.S. cryptocurrency exchange, was discussing selling an equity interest to Trump-affiliated business entities, including a possible deal with World Liberty Financial, the Trump family's decentralized finance project. I believe both World Liberty Financial as well as CZ himself have tweeted and denied the reforms, right? So that there's really nothing else to add, Tang said during the summit, which was attended by Cointelegraph. Let's see if there's anything else. This is some FUD of the week. I have a whole another section on FUD of the week later on, but we'll talk about this here. Bitcoin bulls who still think the cycle peak has yet to come, as retail investors haven't piled in yet, might be using an outdated playbook, according to a crypto executive. The idea that the cycle isn't over just because on chain retail activity is absent needs reconsideration, crypto quant founder and CEO Ki Young Ju said in a March 19th X post. Ju said that those tracking retail movements using only on chain metrics will not have seen the full picture. Retail is likely entering through ETFs, the Bitcoin paper layer, which doesn't show up on chain, Ju said. Alexei Andriunin, a Russian national charged with manipulating cryptocurrency through the Gotbit market maker platform, has reportedly struck a plea deal with prosecutors in the United States. Andriunin, the founder and CEO of Gotbit, has agreed to forfeit about $23 million in Tether's USDT and Circle's USDC in a plea deal with Massachusetts federal prosecutors, the legal news service Law 360 reported on March 19th. As part of the plea, Andriunin will plead guilty to three counts, charging conspiracy to commit wire fraud and market manipulation, according to the letter signed by the defendant on March 19th. Cybersecurity firm Malwarebytes has warned of a new form of crypto stealing malware hidden inside a cracked version of TradingView Premium software that provides charting tools for financial markets. The scammers are lurking on crypto subreddits, posting links to Windows and Mac installers for TradingView Premium Cracked, which is laced with malware aimed at stealing personal data and draining crypto wallets. Jerome Segura, a senior security researcher at Malwarebytes, said in a March 18th blog post. We've heard of victims whose crypto wallets had been emptied and were subsequently impersonated by the criminals who sent phishing links to their contacts, he added. And that wraps up the Hodler's Digest. Next up from Coindesk, this article was published on March 21st. Strategy raises $711 million to buy more Bitcoin in upsized STRF perpetual offering. Strategy, ticker symbol MSTR, will likely soon be in the market for additional sizable Bitcoin purchases after pricing an upsized sale of its latest preferred stock issue. Company sold 8.5 million shares of its 10% Series A perpetual strike preferred stock at a price of $85 each, raising roughly $711.2 million. Strategy initially had hoped to raise $500 million, so it was oversubscribed. The latest series of preferred stock differs from the original STRK in that it comes with a higher coupon, 10% versus 8%, and has no common share conversion provision. The company at last check owned more than 499,200 Bitcoin, so this coming fresh round of purchases should take Strategy stack well above 500,000 tokens. MicroStrategy shares are down marginally in pre-market action to just under $300. Bitcoin steady at $84,000. Next up, from Decrypt. This article was posted March 23rd. Beyond Strategy, 11 more publicly traded companies that are stockpiling Bitcoin. Strategy's Bitcoin buying plan, once maligned by big businesses, has produced blockbuster profits for the software company amid the latest Bitcoin boom, pushing its stock price to an all-time high in November as its stash tops $42 billion worth of the coin as of this writing. And its success has inspired a crop of copycats, though Strategy, formerly MicroStrategy founder and executive chairman Michael Saylor, probably doesn't mind. He's been advocating for such a movement for years now. In recent months, several more publicly traded firms have greenlit corporate strategies to stack Bitcoin as a treasury reserve asset, while others that have already invested in the cryptocurrency are building up their holdings of the asset. More than 70 companies have dived headfirst into Strategy's crypto first business strategy at a time when Bitcoin is flying high. President elect Donald Trump signed an executive order establishing a national Bitcoin strategic reserve, and the coin hit an all time high of 108,000 in January. And although Bitcoin is hovering around the $85,000 mark as of writing time, new companies are still buying in, and existing reserve firms are boosting their stockpiles. Here are 11 more publicly traded companies that are following in Strategy's footsteps and stacking Bitcoin. Tesla, the electric car making company led by Dogecoin aficionado Elon Musk, has held Bitcoin for 4 years. And although it moved its tokens to new wallets last fall, there's no indication that the car maker is selling its Bitcoin. Tesla has a long history with Bitcoin. The publicly traded company first revealed that it invested $1.5 billion in the world's oldest cryptocurrency in February 2021, with plans to accept the tokens as payment for its vehicles. It backtracked on the latter plans after Musk shared concern about the environmental impact of Bitcoin mining and sold some of the coins. But it still has a substantial stash, with recent reports showing the firm still holds 11,509 Bitcoin, valued at around $978 million dollars. They should have held on to their coins. They'd have a lot more now. Financial services conglomerate Block, the firm behind the Square payments platform, owns more than 8,000 Bitcoin, worth at least $758 million dollars as of writing time, according to one estimate. The Jack Dorsey founded company began buying Bitcoin just a few months after MicroStrategy. Its first Bitcoin purchase came in October 2020, when it snatched up more than 4,700 Bitcoin. In November, video streaming platform Rumble became one of the latest public companies to greenlight a Bitcoin Treasury Reserve strategy. Under the Bitcoin buying plan, Rumble will invest up to $20 million dollars in the digital asset, according to a company statement. It's also aiming to reinvent itself as the go-to platform for the crypto community. To achieve that goal, the company has received a $775 million injection from stablecoin firm Tether. On March 15th, Rumble used $17.1 million of the originally planned $20 million to buy roughly 188 Bitcoin. Cannabis company Leaf Brands announced in December it would adopt Bitcoin as a treasury reserve asset. The Canadian business plans to make the investment through a $5 million Bitcoin-backed debenture offering, according to a company statement. The company holds 3.9 Bitcoin in a cold wallet, but no details of Bitcoin purchases have been shared as of March 2025. Medical technology company Semler Scientific began purchasing the largest cryptocurrency by market cap last May when it debuted its Bitcoin Treasury Reserve strategy. Since then, the firm has made several big buys of the token, with its activity ramping up toward the latter half of last year. We plan to continue to purchase Bitcoin with cash from operations and with cash proceeds from our sales under our ATM program, Semler Scientific CEO Eric Semler said in November. We are exploring additional financing opportunities that will enable us to acquire even more Bitcoin. Semler Scientific holds 3,192 Bitcoin as of February 4th, a value of nearly $268 million dollars at the time of writing. Marketing technology solutions firm Bonsai announced in November it would spend up to 10% of the funds in its corporate treasury on Bitcoin. Adding Bitcoin to Bonsai's balance sheet will diversify the assets in its treasury, in addition to enabling the company to profit off of the cryptocurrency's long-term value growth, Bonsai CEO Joe Davy said in a statement last year. Bitcoin services firm Fold recently added 475 Bitcoin to its treasury, bringing its total holdings to more than 1,485 Bitcoin, or about $126 million dollars at current prices. Though the company's affinity for the leading crypto asset is not new, its place among publicly traded companies is. Fold was listed for trading as FLD on the NASDAQ in February 2025. Fold's Bitcoin Treasury reserves serve a dual purpose, providing value to investors seeking Bitcoin exposure, while acting as a corporate strategic reserve to support our growing suite of Bitcoin native financial products, said company CEO Will Reeves. after its most recent purchase. The company, which rewards users of its financial services with Bitcoin rewards, has given out more than $20 million in Bitcoin as of early March 2025. Worksport, a company that makes truck covers, has announced its plan to implement a Bitcoin and XRP treasury in December 2024. A month later, the company made its first six-figure purchase of the assets as a hedge against inflation. Our business has been growing rapidly with revenues up and margins steadily improving. We believe our strategic treasury plan is a low-risk approach to hedge inflation and potentially benefit from increasing regulatory clarity around cryptocurrencies, said CEO Stephen Rossi. Rossi added that the firm is taking a long-term approach to both BTC and XRP. Wow. Uh, we feel sorry for them for the shitcoinery, but good decision on the Bitcoin. Real estate technologies company Fathom Holdings announced a plan in January to use upwards of 50% of its excess cash to create a Bitcoin treasury. The announcement didn't appear to impress traditional equities investors, though, as shares of the firm, which trade on the NASDAQ under the ticker FTHM, are down nearly 35% year to date. Nevertheless, company CFO Joanne Zach spoke positively about the company's Bitcoin strategy, telling investors that it diversifies Fathom's treasury holdings and positions Fathom at the forefront of digital currency transactions in real estate today. The firm committed to purchasing up to $500,000 of Bitcoin or Bitcoin ETF equivalents in the closing weeks of January. Electric vehicle technology company Nuvi joined the list of publicly traded companies creating a Bitcoin treasury at the end of January. The firm, which trades on the NASDAQ as NVVE, announced it would use up to 30% of its cash holdings to buy the top crypto asset pending market conditions. While its stock price rose slightly on the day of the announcement, it otherwise has struggled this year, dropping more than 55% year to date. In addition to implementing Bitcoin purchases with excess cash, the company plans to accept Bitcoin as payment. Bitcoin acceptance will promote more payment options for customers and suppliers with potentially less transactional friction inherent to digital currencies, said company CEO and founder Gregory Polazny. And that wraps up that. So it's interesting. Lots of companies are pivoting to the Bitcoin treasury strategy. Some, no doubt, looking for a boost in their stock price. I mean, that was kind of MicroStrategy's thing too. It was like, what do we do now? When they adopted their treasury strategy. So interesting stuff. Next up from CoinDesk, this article was posted on March 21st. North Korea-linked Lazarus Group holds more Bitcoin than Elon Musk's Tesla. What? The Lazarus Group, a hacking group closely associated with North Korea, holds more Bitcoin than Tesla, the electric car manufacturer led by Elon Musk, according to data from Arkham Intelligence. At press time, Lazarus held 13,441 Bitcoin, worth $1.14 billion, according to data source Arkham Intelligence. That's 16% more Bitcoin than Tesla's Bitcoin stash of 11,509 Bitcoin. Last month, Lazarus Group struck crypto exchange Bybit, draining $1.4 billion in Ether from the platform. Recently, some of the stolen funds have been converted into Bitcoin, with 12,836 Bitcoin distributed across 9,117 unique wallets, as Bybit's CEO Ben Zhao confirmed. Tesla acquired its Bitcoin stash 4 years ago and has been hodling ever since, making it the world's fourth largest publicly listed company in terms of Bitcoin holdings. The striking contrast between Tesla and Lazarus Group emerged even as President Donald Trump's positive stance on cryptocurrency has sparked calls for accelerated Bitcoin adoption among corporations and sovereign nations worldwide. On Thursday, Trump reaffirmed his commitment to making the U.S. the undisputed Bitcoin superpower and crypto capital of the world. Against this backdrop, it will be interesting to see if Tesla and other U.S. corporations respond to being overshadowed by a North Korean hacker. Meanwhile, the U.S. government holds 198,109 Bitcoin worth over $16 billion, representing coins seized in enforcement actions. Trump recently announced the same as the strategic reserve. And my son sent me a meme the other day that said that the North Korea has found a revenue neutral way to add to their Bitcoin reserve, and that made me laugh. Next up from CoinDesk, this is pretty significant news. Last week, the U.S. government removes tornado cash sanctions. The U.S. Treasury Department's sanctions watchdog removed Tornado Cash from its global blacklist Friday. The crypto mixing tool has been accused of helping North Korea's Lazarus Group launder stolen funds from its various hacks and thefts, and the U.S. Treasury Department's Office of Foreign Asset Control sanctioned it, meaning no U.S. person or anyone doing business in the U.S. could engage with it financially multiple times. However, a federal appeals court ruled last November that OFAC couldn't sanction Tornado Cash's smart contracts because they weren't the property of any foreign national. We remain deeply concerned about the significant state sponsored hacking and money laundering campaign aimed at stealing, acquiring, and deploying digital assets for the Democratic People's Republic of Korea and the Kim regime, a press release from the U.S. Treasury Department said. Another release from OFAC lists over 100 Ethereum addresses that are being removed from the specially designated nationals list, which is the record Treasury uses for maintaining its blacklist. Roman Storm, one of the co-founders of Tornado Cash, faces a criminal trial this July over his alleged role developing the smart contracts and protocols. Another developer was charged but has not yet been arrested. After the Fifth Circuit's November ruling, Storm's lawyers filed a motion requesting the court reconsider its earlier decision to deny the dismissal of charges against him. That motion was smacked down in February with Judge Catherine Polk Failla in the Southern District of New York, arguing that whether or not Tornado Cash itself was subject to sanctions does not affect the sanctions defendant allegedly conspired to violate, those on the Lazarus Group. Storm's lawyer, Brian Klein of Waymaker LLP, told CoinDesk that he was very pleased to see the sanctions against Tornado Cash removed. Now, the SDNY prosecutors should similarly reconsider their unfortunate decision to charge our client and dismiss their case against him, Klein added. In a statement, Treasury Secretary Scott Bessent said the U.S. needs to secure the digital asset industry from abuse by North Korea and other illicit actors. In a Monday court filing referenced by the Treasury in Friday's statement, the Treasury Department suggested it might not go so far as to remove the sanctions entirely. Vacating the designation of Tornado Cash in its entirety could have significantly disruptive consequences for national security and law enforcement, the filing said. The token jumped 40% after in the minutes after the Treasury statement. So anyway, this is good news because that list is supposed to be companies and individuals, not protocols. So a lot of people were concerned about that move. So, but the government can always change its mind. New regime could always go back to the old ways. So I guess just enjoy it while it lasts. Next up, uh, this is FUD of the week, and I plugged in a request into Chat GPT to give me some of the top Bitcoin articles from the past week, and I guess I should be surprised. They were almost all of them were negative, slightly or majorly negative. So I just thought I would just read through it. It gave me 6 articles, and I'll just read the blurb on the summary of the article. So the first one that came up was crypto can't outshine gold as a vital store of wealth. And it says this article discusses the challenges cryptocurrencies like Bitcoin face in rivaling gold as a reliable store of value, despite significant developments such as the US government's creation of a strategic Bitcoin reserve. I think it was the Financial Times article, and it's behind a paywall, so I didn't really go much further than that. But if certainly, I'll put a link in the show notes if you'd like to check it out. Next, number 2 on the list. I guess this was positive. Trump vows to make U.S. the undisputed Bitcoin superpower and crypto capital of the world. So we I've talked about this before, so earlier in the podcast, so I'm not going to go into that in any more detail. The third one was In Pursuit of the Bitcoin God. This article follows an exhaustive quest to uncover the true identity of Satoshi Nakamoto, the pseudonymous creator of Bitcoin, highlighting the enduring mystery and its significance to Bitcoin's decentralized nature. Why they won't just leave the poor guy alone, I don't know, but that was a weird one. Number four, why Bitcoin's plunge could have further to go despite its recent bounce. So again, this is certainly FUD. Analyzing Bitcoin's recent price volatility, this piece explores factors that could lead to further declines, including macroeconomic uncertainties and technical assessments suggesting potential downturns before any rally. This one is in Spanish. Máxima tensión en el mundo de las criptomonedas porque Trump pasa de esperanza a pesadilla para los criptobros. This Spanish-speaking article examines the extreme volatility in the cryptocurrency market influenced by President Trump's policies, including the creation of a strategic crypto reserve and its impact on Bitcoin's valuation. So that sounds like FUD. Number six, Komainu's Paul Frost Smith. Trump has put the U.S. back in our priorities. Paul Frost Smith, co-CEO of crypto custody exchange Komainu, discusses the company's plans to expand into the U.S. market, encouraged by President Trump's crypto-friendly policies, and reflects on the future of digital assets amidst market volatility. So I guess that one, maybe that one's not FUD. But then here's the doozy, the one we always love. Number seven, a looming threat to Bitcoin, the risk of a quantum hack. This article highlights the potential risk quantum computing poses to Bitcoin security, discussing how advancements in quantum technology could eventually break the encryption securing digital assets and the need for the Bitcoin community to consider long-term technological upgrades. We've heard this before. It's probably a few years away, and there's just too much riding on Bitcoin for them to not advance the cryptography in lockstep. So that's the photo of the week. Moving on, this one's from Bitcoin Magazine. This article was posted on March 21st. Uh, the FAIR Act would protect Bitcoin holders. So, this is some legislation that's currently going through Congress. A few weeks ago, we briefly touched on how civil asset forfeiture may apply to Bitcoin, a process in which the government may seize citizens' assets without accusing a person of a crime. Something that I'm very, very concerned about myself. With the U.S. government stating that civil asset forfeiture will form a key pillar in building its strategic Bitcoin reserve, and we did talk about this when we talked about that last week or the week before. The Fifth Amendment Integrity Restoration Act of 2023, also known as the FAIR Act, is arguably the most important bill introduced in Congress today to protect Bitcoin holders from extensive government overreach. Without it, many may see their Bitcoin seized and forfeited on behalf of the reserve with little to no recourse. Civil asset forfeiture has long been argued to be in need of drastic reform. Across the country, states have become known to abuse the process to enrich their own law enforcement agencies, which may appropriate the funds collected. From police seizing a Vietnam veteran's van for serving as a container for marijuana, or attempting to appropriate a man's life savings over a seatbelt violation, civil asset forfeiture is one of the gravest abuses of power in the country today, according to the Institute for Justice. Civil asset forfeiture is particularly problematic as the process creates a financial incentive for law enforcement to forfeit citizens' property to the government without due process, as stated by the ACLU, especially in light of Bitcoin's scarcity and its consequent value appreciation over time. This financial incentive is only exacerbated when civil asset forfeiture is applied to build the strategic Bitcoin reserve. To protect citizens from civil asset forfeiture abuse, the FAIR Act of 2023, which was reintroduced in 2024, co-sponsored by Senator Lummis, among others, aims to revise the federal laws that govern the process to ensure that civil asset forfeiture proceedings follow due process as governed by the Fifth Amendment. First, it does so by raising the evidentiary standard from preponderance of evidence, meaning that a party's claim is rather true than not, to clear and convincing evidence, increasing the burden of proof the government has to provide to enforce a forfeiture. With the FAIR Act, enforcing agencies have to establish that there was a substantial connection between the property and the offense, as well as the owner of any interest in the seized property used the property with intent to facilitate the offense, or knowingly consented or was willfully blind to the use of the property by another in connection with the offense. This forms the most important aspect of the act as it applies to Bitcoin. At the moment, the government could seize a person's legally acquired Bitcoin if the UTXO itself had, for example, previously been used in sanctions evasion or touched a dark net market, regardless of whether its owner was aware of the coin's history when obtaining it. By introducing active consent and willful blindness, the FAIR Act prerequisites that the owner of Bitcoin to be forfeited was aware of the acquired Bitcoin's origins for forfeiture to apply. The FAIR Act also requires the government to appoint a counsel to property owners who are financially unable to obtain representation, or if the cost of obtaining representation would exceed the value of the seized property, an issue that has arguably kept many from contesting the forfeiture of assets in the first place, as civil asset forfeiture effectively reverses the burden of proof. At the moment, you get your property back. To get your property back, you need to prove the government wrong instead of the government having to make a case against you, which just seems really unfair to me. Civil asset forfeiture allows federal law enforcement to seize the property of Americans who haven't even been charged with or convicted of a crime, said Senator Booker, who introduced the bill together with Senator Rand Paul. Under this system, police can keep cash, cars, and even homes based on mere suspicion of a crime. These losses often become law enforcement's profit because the burden is on the property owner to prove they should get their property back. Sounds a lot like theft, like the state stealing. The government should never have the power to seize a person's property without due process, yet under current civil asset forfeiture laws, Americans are being stripped of their property without ever being charged or convicted of a crime. The FAIR Act directly addresses these injustices and is a critical step toward restoring fairness and accountability, protecting property owners' rights, and curbing the weaponization of civil forfeiture laws once and for all, Paul added to the statement. If you are rooting for the strategic Bitcoin reserve, the passing of the FAIR Act should be a prerequisite for the establishment to ensure that the government's Bitcoin stack is not built on the abuse of its powers. Yeah, and even if it is law, I mean, of course, you get a new regime, executive branch, they'll try to do it anyway, and then they'll have to go through the courts and all that. So. There'll be plenty of tests of that, even if it does become law. But it's just something to keep in mind. And it's certainly, there's certainly an incentive there for the government to steal your Bitcoin to fund their reserve, as it were. Okay, next up, we'll finish on a positive note. Uh, this is from Bitcoin.com news. This was posted yesterday, I believe. According to an expert, Bitcoin's dip then rip pattern signaled 190% surge after market crashes. Matt Haugen, chief investment officer at asset management firm Bitwise, used his March 17th memo to explain why Bitcoin tends to drop in moments of financial stress, even though it's considered a hedge. Drawing from research by his colleague Juan Leon, Haugen noted that when the S&P 500 falls by more than 2% in a single day, Bitcoin tends to perform even worse, declining about 2.6% on average. But Juan's research showed something else. If you had stayed invested or bought more after the pullback, you would have done very well. On average, in the year following these sharp pullbacks, Bitcoin rose a shocking 190%, dramatically outperforming every other asset, Haugen said. Describing the trend, he stated, I call this pattern dip then rip, and historically it's one of the most consistent patterns in crypto. Haugen suggested this behavior stems from how investors determine asset values using future expectations and risk assumptions, principles borrowed from discounted cash flow analysis. While Bitcoin lacks cash flows, He applied a similar model based on projected value and discount rates. He explained, at Bitwise, for example, we think Bitcoin will be worth $1 million in 2029. So, you might ask, what do we think it's worth today? It depends on the discount factor, that is, the risk you assign it. If you discount it back at 50% a year, the net present value is $218,604. If you use a 75% discount rate, the net present value is $122,633, the executive detailed. Haugen emphasized that geopolitical disruptions like tariffs can temporarily elevate risk perception, raising the discount rate and lowering Bitcoin's near term valuation, even if the long term forecast improves. To illustrate the latest drop in prices triggered by tariff fears, Haugen cited a comment from crypto services firm NYDIG. What does Bitcoin have to do with tariff wars? Nothing, other than its highly liquid, globally available asset that trades 24/7. If anything, Bitcoin stands to benefit from the rise in global entropy, the political and economic disorder created by the administration. For Haugen, such market turbulence may present a strategic opening. He concluded, if you're a long-term investor, these short-term spikes in the discount factor are a chance to get in at a discount. From where I sit, I've never been more bullish. And I have to say, I totally agree with this article. Not investing advice. All right, moving on. Wanted to highlight this week's featured post on the Bitcoin Fortress Substack. The article is entitled Tax Reduction Strategies for W-2 Employees with Bitcoin Holdings, a Bitcoin Fortress deep dive. So I'll include a link in the show notes along with all of the other articles I reviewed, so check it out. Also, wanted to do a quick look ahead at the articles coming up on the Bitcoin Fortress Substack. There's some pretty cool stuff out there. First one up is the Global Uniformity of Government Architecture. Uh, just a kind of a fascinating rabbit hole, I guess, that I fell into. So check that out. Next up, we have Saving in Bitcoin, a peaceful protest against the fiat state, followed by Borrowing Against Bitcoin, CeFi platforms in North America. That will be followed by Riding the Power Curve, Understanding Bitcoin's Exponential Growth. And then Thomas Sowell, a timeless thinker for a Bitcoin age. And last but not least, Holding Your Own. It's kind of a simple guide to self custody and the different custodial setups and how to hold your keys. And then we'll wrap up with the weekly top boosts on Fountain at God's Death with 236 sats. Thank you, sir. And with that, we will wrap up the show. Thanks for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack. It's at bitcoinfortress.substack.com, and you can follow me on Nostr. My endpub is in the show notes. And with that, I will talk to y'all next week. Bye bye.